Hey traders, Raghee here, and in this recap video I'm going to be walking you through the particular setups that you have to use, have to know when the markets have transitioned into chop. So we're going to break this up into a couple different conversations, which is 1, how do you know a market has transitioned into chop? 2, what time frames then do you go to? And 3, what are the setups? And I'm going to use 3 current markets right now. In fact, I just finished up our post-close chat that we do every day, Monday through Thursday actually, and that was one of the questions that I got asked, because a lot of people said, when I always ask them, hey, how was your day? How are you feeling? And a lot of them said just exhausted. And I said, exhausted? What are you talking about? And we went back into these basics, and those are the basics that I'm going to share with you here in this video. So let's start off with the NQ, because this seems to be the one that is prematurely aging a lot of folks. So let's jump into it. Here is 1, here is 2. These are 3 spots on the chart that I want you to familiarize yourself and understand what they're telling you. Okay, so probably the first one is the most important one, which is when we started getting these blue grab candles here on the daily time frame. That was the indication that the uptrend was starting to lose its organization. I like to say it started to lose its swagger. So that's the first indication. It's visual. There's nothing subjective about it. There's no subjective trend line break or some cutesy little pattern. It's just the color blue. That's as easy as it gets. Now, I'm not on the first blue grab candle going to say the trend has completely lost its swagger, but it gets my attention. We come back with a green grab candle, but then we come back with 2 more blues, 3 more actually. That tells me that while I'm going to trust and respect the trend that was, I'm dealing now with less bullishness and a very high chance that we're going to transition into chop. So that's the second part here. When I start seeing red grab candles, there is no way at this point that I should be surprised at all, because I've had all this time to say, wait a minute, we've plotted blue grab candles. This market is behaving differently. And within the context of chop, I will expect that there will be more volatility, because the dominant psychology is no longer the one that, well, the prior dominant psychology is no longer the one at work here. We're not in that dominant bullishness, higher highs, higher lows. We're into chop. There's more indecision. There's more confusion. That's what this mix of green and red and blue continues to tell us. So by the time we get this sell-off, we shouldn't be surprised by it, but we should be doing something else. So number 1 is we acknowledge that the market on the daily time frame is losing clarity. So number 2, we're not surprised by this. And number 3, we continue to expect chop. Now, am I going to trade a daily choppy market? I will only when, and let me emphasize the only part, only when we've reached range extremes, and it might take some time for a distribution market trend to find a range, to really establish them, and for us to be able to say, yes, that's an overbought or oversold level within a range. So that's not going to happen right away. So what we do, and I like to use the terminology retreat, I will retreat to a shorter term time frame. So here are some of the notes from the chat that I just finished up a bit ago. Transitioned out of trends. That's kind of the theme here. Think sideways 34 EMA wave. The introduction, some blue grab candles. Those are the warnings. So now we're at this part. Retreat to shorter term time frames. So what do I mean by that? I'm going to bring my attention to a 30-minute, a 15, or a 5. And the question that I had in the chat room was this. And Admiral, if you're listening, I'm going to bring your question up right now. So here's the 5-minute, or no, it was a 30-minute, right? It was a 30-minute question. So the question was, Rag, where would you have entered on a 30-minute time frame? Now, I always hesitate to answer that kind of question, because it's so easy to look back to the left at a chart and say, well, I would have done this and I would have done that, and so on and so forth. The trading style that I teach, the trading style that I follow myself, is one that almost eliminates that. I say almost because you can't take the discretionary aspect of some discretionary trading styles. You can't take that to zero, but you sure can eliminate that. So once we start seeing red grab candles and a 4 to 6 o'clock wave, what we have in this are two levels that we examined closely. One was this and the other was this. This was probably, for some traders who are a little bit more aggressive, the first opportunity to put on a short sell. This one was the easiest. This one was if you parked your limit order at the value of the 34 EMA on the low, you easily got in, entered on this, and the follow through came. Now, why would I short this? And why would I look to the 30-minute time frame? I've got chop on the daily time frame of the S&P. It may not be the same kind of chop I see on the NAS, but think about those clues that I just pointed out. The blue grab candles, the flattening wave, right? This red grab candle, this red down candle should not surprise anybody at this point. Not when, how many days ago? June 27th, we plotted our first green grab candle. Or sorry, first blue after a sea of green. So I know I should start thinking about shorter term time frames. And that brings us to the 30 or the 15 or the 5. And the question was specifically, Rog, if I wanted to short the 30 or the 39 minute, I think was the question, how would I do it? And I said, well, this would have been valid, but this would have been a layup. Okay, and that's it. That is really it. But as simple as that is, the only reason we're able to start thinking about being long one day, short the next, going to shorter term time frames, the only reason we're in the right spot is because we noticed what we had to on the daily. You know, I think it was Wayne Gretzky, so I don't know how many of you follow hockey, but I think it was Wayne Gretzky who said, I'm a great hockey, and I'm paraphrasing because I don't know the exact quote, but it was Wayne Gretzky who said, I'm a great hockey player because I'm not where the puck is at, I'm going to be where, I'm where the puck is going to be, right? That's what I'm thinking about. I'm not playing the lower lows, I'm not worried about all this stuff, right? I'm where the puck is going to be, and I park my limit order to sell up in here, and I just wait. I wait for the market to come to me. That phrase, that idea was reiterated a number of times through multiple market wizards in Jack Schwager's book, Market Wizards, waiting for the market to come to me, putting my particular strategy at work, waiting for my setup, right? Like a baseball player would say, waiting for my pitch. Same idea, gang. So what is the process? Number one, start with understanding when we've transitioned out of trends. Okay, that's not too hard. The grab candles help us visually, simply, quickly. We start looking at the EMA wave. Is it getting sideways? Again, the blue gets our attention. These are the warnings. Very important. These are the warnings. Then what do? We retreat to the shorter term time frames. And then the last thing I showed you is, because I love trend trading, I trend trade the short term. Okay, now if you understand what I've shown you here, and you know, obviously there'll be more examples to come in these recap videos, but if you've understood what I've shown you here, right, I will tell you, life is going to get a whole lot easier because you're going to be where the puck is going to go. All right, so I hope this has been helpful, and think about what I've shown you. If you're not using the grab candles, I make them available for free to anyone who wants them, or I'll tell you how they're calculated. There's nothing proprietary about it. I do have them already in the trading app store at TradeStation. I do believe they're available on the TradingView platform for free. We have them available on Toss. That's a free. So I make this tool is really important enough where I do think no matter how you trade, this will help. I feel that sincere about it, and that's why we made it available to everyone for free. Give it a whirl. I think it's going to change your trading. Talk to you in the next update.